Hello everybody, this video explains bank reconciliation statement. Companies may notice discrepancies between their bank book, that is bank ledger account, and bank statement in balances and transactions. Bank reconciliation procedures help to reconcile the difference between bank book and bank statement. Step 1. Compare items on bank book and bank statement to identify any missing items and errors. Unpresented checks, checks not yet presented by payees. Checks can be presented within several months. Uncredited deposits, amongst deposits in bank not yet credited to company's bank account until the next business day. Step 2. Update and correct transactions on bank book with missing items or errors. Step 3. Prepare bank reconciliation statement to reconcile the balance between bank book and bank statement with unpresented checks and uncredited deposits. Purposes of bank reconciliation are: it helps to trace any missing items such as bank interest, bank charges, debtors' direct deposits. It helps to detect errors or fraud either made by bank or by the company itself. Determine the exact bank balance on bank book as on a specified date. Illustration 1. Compare bank book with bank statement. Identify any missing items, then update the bank book with these missing items. This is the bank book of Star Company. This is the bank statement from Royal Bank to Star Company. Compare the debit side of the bank book with the credit side of the bank statement. Compare the credit side of the bank book with the debit side of the bank statement. It is because company deposits money to its bank account means increase company's assets. From bank's perspective, it means increase bank's liability as bank keeps the money for the company. Company withdraws money from its bank account means decrease assets. From bank's perspective, it means reduce bank's liability as banks holds less money for the company. First, compare the debit side of the bank book with the credit side of the bank statement. Opening balance 3,500. Bank deposits 600. Deposits 1,000 on bank statement was not shown on bank book. Then compare the credit side of the bank book with the debit side of the bank statement. Check number 1, 700 was presented. Check number 2, 200 was presented. Bank charges 50 on bank statement was not shown on bank book. After comparing the bank statement with the company's bank book, the accountant found out that $1,000 was deposited by debtor Ho Company directly to bank without informing the company. $50 was charged by bank. Then update the bank book with these missing items. $1,000, deposit by Ho company, $50 bank charges. Then calculate a new bank book balance to be carried forward. Illustration 2. This is the bank book of big company. This is the bank statement from Royal Bank to big company. First, compare the debit side of the bank book with the credit side of the bank statement. Opening balance $6,000. Deposit $550. Deposit $800 on bank book was not shown on bank statement. Deposit $400 on bank statement was not shown on bank book. Then compare the credit side of the bank book with the debit side of the bank statement. Check number 101, $750 was presented. Check number 102, $300 was presented. Check number 103, $900 was not presented. Bank charges $50 on bank statement was not shown on bank book. Step 1. Identify any missing items. The accountant found out that there were 2 missing items. $400 was directly deposited by our company. $50 bank charges. Then update the bank book with the missing items. $400 deposit by our company. $50 bank charges. Then calculate a new bank book balance to be carried forward. Now the bank book balance is $5,750. Step 2. Identify any uncredited deposits and unpresented checks. The accountant found out deposits $800 on 30 June was not credited to bank account until 1st July. This is the uncredited deposits. Check number 103, $900 was not presented at end of June. This is the unpresented check. Then prepare bank reconciliation statement with uncredited deposits and unpresented checks. There are 2 methods for preparing bank reconciliation statement. Method 1. Start from bank statement balance. Include bank statement balance with uncredited deposits and unpresented checks that are shown on bank book. So start from the bank statement balance. Include these uncredited deposits and unpresented check to reconcile with the company's bank book balance. Bank reconciliation statement as at 30 June 2010. Balance as per bank statement $5,850. Then include, so add uncredited deposits $800. Also include unpresented checks $900. As payment check reduce bank balance, so it's less unpresented check $900 to reconcile with the company's bank book balance $5,750. Method 2. Start from company's bank book balance. Exclude from bank book balance any uncredited deposits and unpresented checks that are not shown on bank statement. So start from the bank book balance, then exclude uncredited deposits and unpresented checks. Bank reconciliation statement as at 30 June 2010. Balance as per company's bank book 5,750. Exclude means less uncredited deposits 800, and also exclude unpresented check. So add back the unpresented check amount 900. Then reconcile with the bank statement balance 5,850. The above examples shows that the opening balance of bank book and bank statement are the same. Usually, the opening balances of bank book and bank statement are not the same because there were unpresented checks and uncredited deposits occur in previous months. So when performing current month bank reconciliation statement, check whether the previous uncredited deposits have been credited in bank account subsequently and previous unpresented checks have been presented. If not, these previous unpresented checks need to be included again in current month bank reconciliation statement. Thanks for watching.